week. Let's start out by just taking a look where we closed at the week on some of these commodity markets. Taking a look at corn, the July contract, we closed 6.5 cents lower at $3.53 in the July contract. Beef down 8.5 at $3.69 for the week. July soybeans looked like we closed a little bit stronger there, up 2.5, $9.40. Nose down 10 cents, $9.04 on the week. Wheat, $5.03, down 13 cents in the July contract. June cattle closed 37 cents lower on the week at $152.45. June hogs, last trading day for June hogs, closed down 27 cents at $81.45. Held in there most of the week, but we did see the July contract, the next one, down just a hair over $3 on the week at $78.05. The dollar still trading upon this video, looks to close somewhere around 200 points lower on the week, right around that, just below that 95 point level. Taking a look at the grain markets this week, all eyes are still on the weather at this point. Planting progress in beans. How wet is it in Kansas, Missouri? How late will the farmers plant down there? We're looking at June 15th preventative plant dates. Will they continue to plant past that? All questions that are unanswered yet at this point. We did, according to the USDA, see that 79% of the beans were planted as of last weekend, which was within a few points of the 5-year average. And we're looking for an 85 to 87% planting progress next week, yet to be determined. Again, the weather forecast is showing plenty of rains in those areas. We are receiving rains across the vast majority of the Midwest. Hot and dry is certainly not a concern across the grain belt at this point. Looks as though El Nino does have a strong foothold into the summer weather pattern. At this point, there's summer talking. We're going to roll this El Nino right on into the winter months. Soybean cash markets, we are seeing basis firm up in the eastern corn belt as they're trying to source some beans. Crush margins continue to be very good for processors, helping to support that basis. Out east, it's not nearly as tight out west. Probably a few more beans available out west, or at least that's what basis is telling us. Corn cash market, basis has continued to hold steady to erode. Here locally, we are paying a penny over the July for corn here in Cedar Rapids. Crop ratings held firm this week, 74% good at excellent. Traditionally very good ratings at this point. Not looking for much of a decrease or increase going into next week. Again, the weather forecast we'll keep an eye on that. Looking forward, it's going to be the acreage battle and the stocks report at the end of the month. But we did see a monthly supply and demand report this week, and that gave us a little bit of a pause on Tuesday. But we went into the trade with a carryout here in old crop corn stocks at 1.851 billion bushels, and we came out of it at 1.876 billion bushels, a 27 million bushel increase, pretty much in line with what the trade expected, a little bit more. Soybeans, we came in with a 350 million bushel carryout, old stocks, beans, and USDA released a 330 million carryout, upping the crush 10 million and exports 10 million upon that report. So we're down 20 million. That was a little bit lower than what the trade was expected, but in line as well. So nothing out there as far as a huge surprise on the monthly S&D report. Again, now that that's past us, the trade just continues to look at weather at this point, and the debate will start on the acreage battle and the stocks report in weeks to come. When you take a look at the futures, we're down here testing right at the bottom end of the recent trend line. I would suspect we will find a little bit of support in these areas, but I would suspect we're looking at a range-bound trade over the next 2 weeks until upon the release of those report. We don't have the commitment of traders report this week, but I would suspect that the managed funds are still going to hold a fairly large, sizable short for both corn, wheat, and beans. We may see that trim just a little bit since it does go through Tuesday of this week. Taking a look at the cattle markets, we did see futures on a kind of a wild ride this week. We bought them up early in the week only to sell them off close them lower this week. Very weak cash trade last week on light volume, follow through to this week. Very little cash trade to this point. Still could be some cash trade after this video or later this afternoon yet. But we're hearing some cash trade out there, 154.5 to 155. Some 246 in the meat. Very light volume. And we did see the future sell off very hard today. At one point almost limit down. And that follows a strong opening week on boxes, where boxes were up strong. Still down significantly from that 66 high in the choice. But it seemed as if somebody was wanting to own cattle futures earlier in the week. And when cash seems as if it wasn't going to trade stronger, we did see taking those longs off here towards the end of the week. Exports had a very good week for beef, the best of the year. A little bit of the weakness in the dollar may have helped that as well. But we are seeing some demand abroad coming into place there. Again, those exports are more for your quality meats, as the less desirable meats are still imported into the U.S. We're not seeing the weights drop much either at this point. Still holding, we're still slaughtering at heavy weights compared to last year at this point. We are seeing those weights drop in the hog market though, down 2-3 pounds from last year. But that is made up by about a 10% increase so far this year as well. So the hog cash market is weakening slightly this week. We're seeing the futures technically looking softer as well. Not a lot of positive news out there at this point. Any bounces or rebounds in those deferred cash markets do look like an opportunity to try and get something sold and or hedged. One positive note out there possibly might be talk of Chinese hog production down anywhere from 10 to 15% this year. So that's certainly something to keep an eye on as well. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525 or check us out on the web at biscommodities.com.